Transition to Green Economy, IMF World Economic Outlook Data Analytics.
Here I am, presenting you with podcast episode number 7, Transition to Green Economy, IMF World Economic Outlook Data Analytics. It's an interesting one. IMF October 2021 report could be the best document as an eye-opener for directing the I 4.0, the fourth industrial revolution. I'm looking at the jobs and the green economy, growth projection for 2021 and 2022, how India tops the list and why, what transition to green economy parameters IMF has dealt with, particularly the projections on critical metals for green technologies, the 20-year projections on net zero scenario, 2021 to 2040 for cumulated real revenue for the global production of selected energy transition. Adding another report from IMF on fossil fuel subsidies, deriving conclusions from another IMF report, Chapter 3, Investment Funds Fostering the Transition to a Green Economy, on transformations critical for taking on I 4.0 from industry for the societal changes. Why it is unavoidable, as any legislator has to be a snowball senator, focusing on one's constituents, on emerging technologies, creating self-produced energy sources and purchase from green or greener scope and companies, on greenwashing, how is it under Scope 3 reporting and how industry has to take on the scope on compliant procedures, on financial stability, how each company has to focus on their side of fixed costs and finance costs, the treatment of companies receiving fossil fuel subsidies, on causality, as to why and where climate-oriented funds need to be substantially increased, on climate stewardship, as to how each company transacts trade upstream and downstream companies, on sustainable living, why sustainable investors have to look for a long-term commitment, investment fund returns being tracked with the CREAM ratings reports, corporate governance, risk management, earnings, accounting quality and management quality, and finally on a corporate management operating system, providing a measuring methodology, EPP, effort per person, and going toward GDP and GNH, Gross National Happiness Index. Importantly, I am looking at the interpretation and measurement of politics of policy making and policy accidents IMF talks about, with a suggestion as to how IMF should transform the reporting system by bringing the abstraction into reality, acknowledge value where value is due, and deconstruct what is valueless, so that the nations look forward to IMF World Economic Outlook reports proactively, than IMF revising their own projections of the previous quarter in the current one. Industry has a responsibility that I have clearly brought to highlight with an analogy of a plane sitting on the tarmac and not taking off.
Global Growth Projection, 2021 to 2022. India leads the world.
The growth projection 2021-2022. Compared to the July forecast, the global growth projection for 2021 has been revised down marginally to 5.9% and is unchanged for 2022 at 4.9%. So says Geeta Gopinath in a foreword to IMF October 2021 report. Number 2, table for Asian and Pacific economies. Real GDP shows India at the top with 9.5% for 2021, as against the rest of the world at 5.9%, and China at 8%. Looking ahead for 2022, the same trend continues, with India topping the list at 8.5% as against 4.9% for the rest of the world, 2022. And China at 5.6%. Number 3, Table 1.1.6, Summary of World Real Per Capita Output. What is crucial and important to note from IMF report is the per capita output, where India stands at the top, 8.4% for 2021 and 7.5% for projection 2022. With the same population between India and China, almost, China is at 7.7% in 2021 and much lower at 5.4% projected in 2022. India is a vibrant economy.
Labor markets, by economy and worker groups.
Number 1, employment and participation in labor markets. Employment and participation in labor markets are still below the pre-pandemic levels, with emerging market and developing economies hit harder than advanced economies on average, as the IMF report says. Number 2, lower skilled workers' participation is also depressed. Number 3, employment growth is expected to lag the output recovery.
India's I 4.0, the fourth industrial revolution. 1. Advanced digital technology, and 2. The societal changes.
Number 1, for India, it had been a tremendous upheaval, shifting millions of people across the country at the beginning of the pandemic. Number 2, I 4.0, the fourth industry revolution, adopted advanced digital technology, reaching out to farmers, direct bank transfers, Aadhaar cards IDs, COVID-19, Arogya Setu, and COVID, enabling societal changes, free food ration to 800 million people during the whole of pandemic, and 1140 million people being vaccinated.
Critical metals for green technologies.
Critical metals or green technologies. The supply of metals is quite concentrated, implying that a few top producers may stand to benefit. In most cases, countries that have the largest production have the highest level of reserves and thus are likely prospective producers. I'm reading from the IMF report. The Democratic Republic of Congo, for example, accounts for about 70% of global cobalt output and 50% of reserves. Figure 1.sub.5. Other countries that stand out in production and reserves include Australia for lithium, cobalt, and nickel, Chile for copper and lithium, and to lesser extent Peru, Russia, Indonesia, and South Africa. The economic benefits of higher prices for metal exporters could be substantial. Metals. Revenue and policy implications in the net zero by 2050 emissions scenario. The demand boom would lead to a six-fold increase in the value of the metal production, totaling $13 trillion over the next 2 decades for the 4 energy transition metals alone, providing significant windfalls to producers. This would rival the potential value of the global oil production in that scenario. See table 1.sf.2. Transition to green economy. Number 1, transformation. Per IMF report, October 2021, it states, Achieving the reductions in greenhouse gas emissions needed to mitigate global warming will require a transformation of the global economy. In the context of mitigating global warming, I want to emphasize the two-winged planes made up of the society on one side and the industry at the other. Shall we name it as the essence of I 4.0, the fourth industrial revolution? Number one, advanced digital technology on one side, and two, the societal changes at the other. With reference to another IMF write-up, climate change, fossil fuel subsidies. It says, when defining fossil fuel subsidies, it is important to distinguish between consumer and producer subsidies. It goes on to add, in practice, producer subsidies tend to substantially smaller in magnitude than consumer subsidies. In my analogy of two wings, producers are the left wing, meaning industry. In the parlance of scopes, they are the upstream companies under scope 2. Consumer subsidies are indeed high. The plane is the policymaker, the government, which is a scope 1 entity. The consumer subsidy is the downstream parameters for the government, represented by the society. Transition to a green economy. Number one, consumer subsidy will not stop. Two, producer subsidy is a disincentive for the recipients of the subsidy not to give up their income stream, having already factored into the CAGR. Post Yom Kippur War, there was a tremendous downsizing programs involving billions of dollars in re-engineering efforts that were ever undertaken in the auto industry. Producer subsidy recipients have to do the same now toward green economy. Producer subsidy will stop or will have to stop. Transformation of industry is the critical point for takeoff. Pass on the benefits of downsizing programs in industry to reduce consumer subsidies. The plane will continue to remain on the tarmac till then. Two, IMF reporting. IMF reporting as to the World Economic Outlook reports looks at the variances between their own projections in April 2021 and July 2021 compared to the current October 2021 projections. If you had to look at, say, 2022 quarterly reports, or for that matter, quarterly reports of 2030, will not the same reporting be continued? This must change. There are two areas I'd like you to take note of: policies and two, practices. In my book, Corporate Citizenship and Sustainability, Measuring Intangible, Fiscal and Ethical Assets, I bring in a framework, corporate atomic structure. Policies are the proton, CO team the electron, the society, the people, the neutron. IMF report states on policies, to quote, more generally, clarity and consistent actions can go a long way toward avoiding unnecessary policy accidents that roil financial markets and set back the global recovery, ranging from a failure to lift the United States debt ceiling in a timely fashion to disorderly debt restructurings in China's property sector and escalations in cross-border trade and technology tensions. Policy accidents, as Boutros Ghali had said in 1995, are the politics of policymaking. Repealing farm laws in India is a big policy reversal but a healthy way of strengthening Indian democracy. IMF reports must guide the policymakers as how to avoid the policy accidents rather reporting ex post facto what happened. By the corporate atomic structure, policies in the society form a nucleus, just as in the atomic structure. It is unavoidable as any legislator has to be a snowball senator, focusing on one's constituents. As in the atomic structure, CO team, which is the electron, spins around the nucleus. In nature, the electron spins around the nucleus at a great speed, nearly 3/4 of the speed of light. So is the case looking at the corporate structure. The nucleus is not strong, with the result industry spins off tangent. Like neutron, society does not influence the identity of the industry, but adds mass to the nucleus, strengthening it. It is crucial for the industry to listen to the society and effect the societal changes needed to an overall development of the nucleus. Practices. Two important formulae I deal with in my crime report analytics are one, CAGR to CDGR, and two, CARR to CDRR, RR being the reduction rate and D being daily rate. Table 1.sf.2 from IMF gives the estimates of cumulative real revenue for global production of selected energy transition metals 2021 to 2040. The net zero scenario is $13.008 trillion for selected metals from current $4.974 trillion. This works out to a CAGR of 4.92% for a 20 years period. Individual company, wherever they are, has to set its targets to reach the $13.008 trillion valuation for the selected metals. Keep tracking for each company by CDGR, daily growth rate. Net zero scenario integrates each company with the energy policy of reduction in carbon footprint. When applied to fossil fuels from $70.090 trillion in 2018 to $19.101 trillion by 2040, we get a CARR of 5.74%. The RR must be brought to CDRR, that is daily reduction rate, monitoring the target set. That could be 5% or 10% or even 45%. As the EU policy had set the targets for 2030. EU policy, it states, projections indicate that if the current EU fully implemented, EU 27 greenhouse gas reductions by 2030 would be around 45% lower compared to 1990 levels when excluding land use emissions and absorptions, and around 47% lower when including land use. Note, EU 27 base area is 1990 and the targeted year is 2030 or 40 years. It is an integrated approach we are talking about, a net zero scenario where it is not just the revenue stream but integrated with decarbonization. That is what I expect IMF to take the lead. If one looks at the India's annual budget, collating GDP data from several states, one can see a lot of gaps mentioned as NA, where even major states like even Maharashtra and Gujarat not having any data. Each state GDP data is delayed by a minimum of 3 years. If one looks at the IMF paper on fossil fuel subsidies, the graphs are of 2015. The analogy of a plane with two wings we are not able to take off. Snowball senators are a must to make sure industry hears the society that has taken the burden. That's why societal changes are a prerequisites for the takeoff. Industry can do with the principle of a return on intangible that has cracked the code of the science of metaphysics. Transformation means industry to buck up. 2. Emerging technologies. Cumulated real revenue for global production of selected energy transition metals 2021 to 2040. We found the net zero scenario of targeting $13 trillion dollars from the current level of nearly $5 trillion. Scope 1 companies do not have control over upstream Scope 2 companies. That emerging technologies would enable, number one, create self-produced energy sources, and two, purchase energy from Scope 1 green or greener companies with increased use of technologies. In other words, transition to green economy assures Scope 1 companies all the way in the supply chain. Number three, greenwashing. Sustainable investment funds face challenges related to greenwashing. As per IMF Chapter 3, investment funds fostering the transition to a green economy. The entire industry, the left wing in our analogy of the two wings, would become Scope 1 compliant companies, upstream and downstream. Greenwashing is part of the Scope 3 reporting for a Scope 1 company. Scope 1, Scope 2, Scope 3 are as defined by Professor Volker Hoffman. 4. Financial stability. Scope 1 companies do not have control over the Scope 2 companies. Now that can influence Scope 3 parameters that are purely individualistic, other than own products. The entire industry would become Scope 1 compliant companies by focusing on their own fixed costs, including finance costs, to become a self-disciplined units of financial stability. Companies receiving fossil fuel subsidies must be subjected to 1. Cost audit, and 2. Pricing of the products. 5. There's a clear case of causality for climate-oriented funds to be substantially increased for meeting the demands from the industrialized countries such as South Korea, Japan, Germany, France, UK, as well as the US, who could look toward other nations for outsourcing and the matching efficient Scope 1 compliant companies around the globe. These industrialized countries currently find themselves in a claustrophobic capsule of not able to spread the industries within their own countries on account of lesser area that we find obvious when we measure per square kilometers of carbon emission. Number 6, climate stewardship. Every industrial unit would primarily become Scope 1 companies, taking along upstream companies for the inputs and taking into account Scope 3 parameters for supplies to industrialized countries. Being certified as a Scope 1 company, Scope 3 parameters are also made evident as to how it is measured and reported. Entire supply chain would become Scope 1 compliant companies, transacting trade with each other, upstream and downstream, assuring climate stewardship. Number 7, sustainable living. Sustainable investors for outsourced industry cluster of companies are less sensitive to short-term returns with a long-term commitment. We are looking at the transformation of millions of workforce from all over the world toward sustainable living, the hallmark of societal changes. Number 8, investment fund returns. Cream ratings report corporate governance, risk management, earnings, accounting quality, and management quality. For each scope 1 compliant company would address the issue effectively. There are 170 open-ended process blocks of qualitative and quantitative elements of management for each company, with a cream ratings analytics creating a matrix of an index of inactivity by a process block and corresponding resource area, ensuring the performance standards from each individual within a company. There are no separate company ratings, but performance of each individual within a company is measured. Cream report for each company enables tracking investments returns by CDGR and CDRR, and on-the-spot governance as a dynamic function. Finally, the last one, number 9, corporate management operating system. A corporate management operating system is established with a corporate atomic structure where matter, energy are brought to light. The 3 laws the corporate shall inherit from mass and energy, which have an equivalence. Law number 1, energy is liberated matter that we show in P&L and balance sheets. Law number 2, matter is energy waiting to happen that may be lying in the raw material stores or finished goods go down or incomplete project work in different places, or the towers of Babel strewn all over the world, waiting to be liberated from the present form. That is law number 2 for you. Law number 3, antimatter when it collides with matter forms a pure energy. Law number 3 is intangible, is the antimatter, is the effort from the individual entrusted with the task of packing. Law number 2, the matter where energy is waiting to happen, to law number 1, to be energized as a liberated matter. It's as simple as that. The denominator is human energy force. Return on intangible, ROI. The numerator is action or inaction, whereas the denominator is 1, as the capability is common to all. Hence, the ROI gives the binary value of every action and simultaneously the inaction, preparing a matrix with an index of inactivity by process area as well as resource area. Then comes GNH, Gross National Happiness Index, with metrics and benchmarking derived from nature. Cream report is done effectively for merging the 2 wings of the plane, industry and societal changes. Further, we are in a position to build GNH, Gross National Happiness Index, taking note of the 5 criteria based on the Global Council for Happiness and Well-being, GCHW list. Such process blocks under the following categories. Number 1, health. Number 2, education. Number 3, work. Number 4, personal happiness. And number 5, cities.